All right. So welcome guys to today's lesson. We're talking about the opening range breakout here with algo snipe trading. So just going to be going over a pretty simple, commonly used day trading strategy, which takes kind of the opening range, the first couple minutes of the market settlement, and then from there determines, point of entries and exits. So it's a pretty commonly used strategy. Pretty sure there's a bunch of videos on YouTube here already that go over what the opening range breakout is and how they use it. And in this class, I'm just going to give you a little bit of my own insights on how I apply it to the charts and now how I use it, particularly to trade NASDAQ and ES futures. All right. So quick disclaimer here before we get started. Again, everything in this presentation, guys, is for just educational and informational purposes only, right? The content here should not be considered financial investment or trading advice, right? Trading itself carries a very high level of risk, and we are not financial advisors, right? We don't know your situation, we don't know what your circumstances are, and for that reason, we can't safely assess what risk you should be taking of. So just note that with stocks, there is a very high level of risk. You do have the chances that if there is like a downturn, like the 3.5% correction we saw on Friday this week, there is chance that you could lose your profits, right? If you go long on a position, the max you can lose is what you put into the market, and if you go short in a position, well, your losses could be infinity. So it's a very high risk involvement. It even depends on what assets you trade. Determining on certain stocks are pretty volatile. Some certain options and derivative contracts are even a higher level of risk, right? So we're not advisors. Please, guys, whenever we do talk about topics, we go over some of the examples as well in today's class. Just make sure you guys always conduct your own research. And even we're going to talk about the opening range breakout in today's lesson. Just make sure that you guys, before applying it and gun-ho on Monday, Tuesday, apply the opening range breakout and try to take the trade, back test it, right? Make sure that it is a strategy that works good with your psychology, and if you implement it and it's giving you a good win rate, a good risk to reward, then start applying it. Dip your toes in the water by starting off with like a small size, and then start to go in more and more as you get more confident, right? So that's typically how you approach really anything new in this market, right? Just take it, learn it, and then start applying it slowly, gradually increasing your exposure. Okay, so that being said, what is the ORB strategy? So pretty much the opening range breakout strategy is very simple, right? Technically, all you do is mark the high and the low of the opening candle in a specific range, and then that initial kind of level, that high and low, will become your initial support and resistance levels, right? So then just apply normal trading there. Once price comes into a support, look at the higher time frames, look at momentum, internals. If you guys need a refresher, check out the day trading refresher course I did prior, which go into some more details of what exactly we're looking for in these trades, and then apply that at those price points, right? So it's really just to kind of give you two kind of point of interest, two levels to mark on your chart that you can then use in your kind of day trading to catch either a bounce or a rejection or a possible breakout, right? Commonly, ORB does stand for a breakout strategy, and when this strategy first came in play, when not that many people knew about it, it used to mark really good breakouts. Like some people would mark like the first 50-minute candle, take the high and the low of the candle, and then wait for when price would break above the high to then take long trades, or break below the low to take short trades, right? And it was very commonly a strategy, and it got too common to a point where big institutions then caught tailwinds of what was going on, and now there's a lot of shenanigans that play around. So you can look for things like failed breakouts, for sweeps, other things that kind of back up your trade. But these areas, because it's still very commonly used, and it is just by like monkey see, monkey do behavior, it becomes a important key level to watch for. So you can use any time range for the opening range. I know the first 5 minutes, the first 50 minutes is very commonly used for high volatile stocks like gold, NASDAQ, your high volatile assets which move up and down a lot. You can set it for that time frame. I like to use the 15-minute, so I take the first 15-minute candle, mark the high and the low, and that's what I use for the opening range, and it does tend to work out pretty well. We'll go over a couple examples here from this week's trades on how the opening range led to some nice opportunities, right? So that's pretty much how I use it, guys. So we'll go over some of those examples here now on the opening range breakout strategy. Again, not a complicated strategy, right? Just pretty much marking the high and the lows of the first range. That becomes your point of interest, and then using some of the other stuff that we talked about in prior lessons, as well as in the member section, you can then determine whether they look for a good trade for upside or downside, right? So some examples that we can go over here on the NASDAQ. So I pretty much made it pretty simple. I took off all the other like complicated, stuff that we look at, the swing highs and swing lows, but just slowly looking at price action, right? So we'll start off by looking at Monday session, right? So on Monday session, just marking again, the first 50 minutes will go by. All right, so go back to Mondays. right? So just marking in that first 50-minute candle, right? So taking from 9:30 a.m. Eastern time from the New York Open to 9:45 a.m. in the Eastern, in those first 50 minutes, and just marking the highs and the lows of that time frame, right? You can also look at the several indicators that also provide you, just can naturally draw the levels for you. One that I would recommend that is also pretty good is this Lux Algo ORB and targets. It works out pretty nicely, and it will you can customize it to determine what time frames you want, right? So you can customize it between the 5, 15, or the 30-minute, whatever you want to go by, and then you can set the custom range. So I have it set for the first, again, 15 minutes of the New York session, right? Because that's when price tends to be the most volatile, right? And you also hear me say, like in the group regularly, that I don't trade the first 5-10 minutes of the market anyways, because it leads to a lot of fake outs, right? You can have moments where the price is looking like a short, but then it quickly bounces, or vice versa, looking like a long, and then it ends up being a short, right? So it does tend to happen. Also, a lot of basis of my trade is relying on what's going on with the internals, right? Looking at the advanced decliners, volume difference, tick indicators, stuff like that, to help give me confidence in trade. And typically those indicators need time in that first 5-10 minutes to kind of settle out as well. So for my trading, this works out perfectly, as I don't trade the first 5-10 minutes, and then I kind of keep the opening range breakout in that first 50-minute range, right? So that's really what I like to use, and then just reacting to see how price, when test those levels, to see what it does, right? So this was on the Monday session, this was on the 50-minute time frame, and you can see that we developed that first range here, and you can see that price came and tagged it here at this 10:30 candle, right? So at that moment, when it tagged it here, we were getting some signs for a possible bounce, right? We kind of got on the 50-minute a bullish engulfing candle here, right? This candle overlapping the highs of the previous candle. We had momentum generally weak. It was slightly bearish in the longer time frames, but if you kind of zoom in, if we look at the 5-minute here, I didn't see it. So look at the 5-minute here, it was relatively weak, right? It was relatively weak on this push, and there was also notion for a possible double bottom, right? So we had a lot of indications here that this could possibly turn around. So just watching and marking the highs of that 50-minute candle here, right? So it's marking the highs of that 50-minute candle, watching for that breakout, and then we got a nice bounce play, and this led to a very nice long right up into that other 50-minute range high, right? So you don't have to necessarily look for a breakdown here. Again, a lot of traders possibly, because again, this strategy is so commonly called the opening range breakout strategy, they wait for that 50-minute to happen and then look for, you know, a quick short below, right? So this move here, possibly also why it added to the fuel upside, is because traders were looking for that, right? They saw this candle here, printed a massive red candle. At one point it was looking like it was going to break, and then they kind of probably stick stayed it in the last couple minutes of this 50-minute, wick this candle higher, and then this would have been your long indication here, right? So that was a good trade on the Monday session using the opening range breakout. Another trade where it did kind of give a good breakout was on the Tuesday session, right? So on Tuesday, same thing, 9:30 to 9:45 on that Tuesday, marking the high and the low. The second time the price came to test that, we got a confirmation close here on the 5-minute, on the 50-minute. If we zoom in on the 5-minute here, it was also looking very much bearish, right? Momentum was kind of picking up. So that was giving us good signals here that this would have been the good short, right? So good opening range breakout there to the downside, and a pretty nice move here. This all in all was from this breakout here to the downside. That was about 61 points, right? So not bad on the NASDAQ on a quick trade there on the Tuesday session. You can see even it worked out as a significant, you know, interchange between support and resistance afterwards, right? You can see that as the day progressed, it kind of rejected there several times, and then finally when it broke above, it led to a nice long trade as well towards the end of the day. So it just could act as a good intraday, you know, level to watch for, to put on your charts, and then just react accordingly depending on how price reacts around that point, right? So if you go to the next day, we go to Wednesday, right? Oh, so Wednesday. Right, so this gave a nice breakout to the upside here, again marking the first 50-minute range, the highs and the lows, right? And then at this point you were seeing good momentum coming to the upside. It's kind of weak, bearish, but then it started to squeeze on this candle to the upside. The 5-minute was also looking very good here. If we go to the Wednesday session, right, 5-minute was also looking very explosive to the upside. So just a nice move, and then we got the confirmation close here on this candle, leading to a nice trade to the upside, and this would have been about a 70-point move there as well, right? So really nice stuff. Very simple strategy to use. Again, could just act as a point of interest, and you can see as long as we held above this opening range, the market trend was to the upside. We'll go to Thursday session. Oops. Right, so this was a Thursday session, also providing a lot of good trades here. A break down to the downside on 10-15 candle, right? So establishing the first 50-minute range. Several wicks, no confirmation close until we get that confirmation close. That leads to a nice breakdown. Good signals on our backdrop here as well, leading to a nice trade and several rejections as well, right? And then on the Friday session, I guess we all know what happened on Friday. Again, Friday was a little bit more news-based, so this is kind of an outlier. But again, just establishing that first, 50-minute range. We got that breakdown pretty heavy, right? You can see possibly maybe on the 5-minute. Again, it was a pretty parabolic move coming off of the US-China news. We'll talk about that here as well when we discuss our next lesson on swing trading. But a really nice break there to the downside, and then from there, just a parabolic move to lower, right? So using the opening range breakout, guys, again, a very simple strategy, very easy to use. Again, you can apply, TradingView has a bunch of indicators. If you search up ORB, there's a lot of them, but I really like the Lux Algo, ORB, and targets if you guys want to apply that. And then again, I just changed the settings here to complete the first 50 minutes of the market and taking on the 50-minute time frame, and I can automatically set it for you. But also, if you guys are in the live session, I will manually draw it on the charts as well. Okay, so that is the opening range breakout, guys, today. Again, not much to discuss on this. A very simple strategy that you can apply to your day trading, and I would recommend back test it, paper trade it, and then slowly, if you like how it works, if it gives you good risk to reward, then hey, start to apply it in your trading as well, right? Just make sure you guys practice this good risk management on top of that. So thank you guys for joining for today's opening range breakout lesson. Check out the channel for more videos ahead. All right.